Hi, Pauline. After your interview in Vancouver Express, I've got many questions about your activities like investor. Not only like your mortgage specialist,
Right.
but especially like investor. You're active investing in our area in Greater Vancouver, and tell me example of your investment and how do you prepare. What's your like method of investment?
Right, exactly. Okay. Well, as an investor, people should know that they need to put 20% down on a mortgage or on a purchase. So that's equity out of your pocket or other properties. So based on that, what I always do is I always look at the property itself as an investment. Will it give me a return on my investment? So you do have to look at the income that comes from the property. So for example, if you're purchasing a property, a house with a basement suite in it for $500,000, you put $100,000 into it, you've got a $400,000 debt there. So you need to earn enough income to cover the expense of that debt and the property taxes every month. So if a property is generating $2,500 in income between the upper and lower floor, that is going to cash flow. It's going to more than cover the debt for the mortgage financing as well as the property taxes by a couple $100s a month. That's a good investment moving forward. It allows you to have extra money for repairs, vacancy, that kind of thing. So those are the types of investments that I would look at just on a fundamental level. When you're looking at condominiums or multi-family units, that type of thing, the numbers still apply. You need to make sure that you are cash flowing every month moving forward and allowing for vacancy and maintenance as well.
Tell me example. Last maybe you're bought like some property nearby. Just example.
Okay.
Just what do you think is a good idea? Because many people think it's downtown Vancouver is a good idea, but I personally understand this as condo in Port Coquitlam is really strong market for renting.
Right, exactly. Certainly can get better bang for your buck as you go further out. The Tri-Cities as a whole, Port Coquitlam, is a very good example of where there are condominiums around the $250,000 range even. And for those, if you're collecting rental income of anywhere, depending on the type of unit it is, of $1,000, $1,200 a month, that is certainly going to cover your base costs. You do have the strata fee to consider, so it is prudent to be watchful of those strata fees. Some units have higher fees than other, and that is going to be a cost that you'd certainly want to be able to cover with the income. Definitely have purchased property myself in the Tri-Cities in Port Coquitlam. I have clients that have properties, townhouses, which generate a little bit more rental income than a condo. But certainly the market for rent in Port Coquitlam has gone up, comparable with that of other areas of the Lower Mainland. So, it's a good area to look at for investment. And I do also have clients that have purchased, like I said, houses with basement suites are quite popular. And you do also have the ability, even if you wanted to live upstairs and rent it downstairs or vice versa, that's always an option moving forward as well.
Thanks. Maybe last question. Many people ask me, what is the good positive cash flow? What's good enough? How much should be this positive?
That's a good question. It really does vary. So for example, if you're looking at, you own a condominium, you're paying strata fees, so the maintenance of that building is certainly going to be included in those fees in the contingency fund of the strata management company that should be covered moving forward. So you're really just looking at, the maintenance of your own particular unit, which would be, the appliances and things like that. So you wouldn't really have to be as much concerned in terms of ongoing maintenance because it is covered under the strata. So if you're making for every dollar of debt that you have or a cost that you have, if you're making $1.10, you're probably going to cover quite comfortably. When you start looking at multi-unit house properties like a duplex or a fourplex, you've got yards, you've got multiple furnaces, hot water tanks, things like that. Yeah, you're definitely going to want to make sure that you cash flow more likely, maybe even for every dollar of expense, maybe $1.20, $1.30. So that adds up so that you can build up your own little contingency fund for those types of repairs. So it really does vary on how much rental income and the potential for increasing your rental income over time, because of course rents rise, so there's that to consider as well. So that's why really discussing, doing that original assessment with your realtor, with your mortgage planner, people like that can really help you run those numbers so you can know about the area and about the financing costs moving forward. So it's definitely something where you need to have a team of people to help you and discuss and review those and give you their best input and advice as well.
Okay, and absolutely last question. In your calculation, you indicate this that the taxes they add to your expenses, or this is your like possibility to write off the taxes. How your calculation looks like?
Okay, well, any cost of borrowing for a mortgage, for example, if it's used for investment of a real estate purchase, the interest cost is tax deductible. So that can be written off against the income that you have on the property as well. Property taxes, any maintenance, that kind of thing. So generally speaking, when we look at it from a lender's perspective, they calculate some of those into the debt coverage ratio for qualifying. For tax purposes, you really do have to sort of discuss that with your tax accountant as to how much that's going to affect your own personal income, because you likely would have personal income as well. So it's difficult for me to say exactly how you would calculate that, but you should know that as any income you have generated from a revenue property, you do have the ability to write off any of the expenses. And I've seen clients where there's, especially if you're doing renovations or if you do have other things, upgrades, those costs can all be written off as well. So it can be quite attractive, but it's really important to work with a good accountant for sure.
Thank you very much.
You're welcome.